Hello everyone. In this video lecture, we will be discussing about bank reconciliation statement. Let's have an overview of BRS. When the cash or check is deposited into bank, the bank account is debited by the merchant in the cash book. The same amount is credited by the bank in merchant's account in its ledger and in the passbook. Similarly, any cash withdrawn or check issued to third party is credited in the cash book and debited in the passbook. As a rule, the cash book and passbook should show the equal and opposite balances on a particular date, but in actual practice, it does not happen. Mostly, the balances as per cash book and balances as per passbook are found different on a particular date. A number of reasons are responsible for the mismatch in the differences in the balances of cash book and passbook. Thus, a statement should be prepared periodically for the items causing such difference in bank balances. This is called reconciliation statement or a bank reconciliation statement. As per the definition given by Kohler, reconciliation statement is a statement of the details of difference between any two or more accounts. Another definition given by Collin and Jolliffe is bank reconciliation statement is a statement which shows that how the bank statement can be made to agree with the company's ledger. Now we'll discuss some characteristics of BRS. It is merely a statement, not an account. It does not form a part of double entry system. It is prepared in case of differences in the balance of cash book and passbook. The reasons for the difference are relevant on the date of preparing BRS. It is a periodic statement. It is prepared to attest the accuracy and completeness of cash book records. It gives the detail of transactions causing difference in the bank balance of cash book and passbook. Now let's move on to the need and objectives of BRS. First one is, it is prepared in order to test the accuracy and completeness of cash book records. Next one is, it helps in detecting errors and omission in the cash book and passbook. It prevents fraud in recording and banking transactions. The delay in the collection of checks deposited and the payment of checks issued is stated in the BRS. So, it contains the details of causes responsible for the mismatch between the bank column of cash book and passbook. Now, we will be discussing some reasons for the mismatch in balances. Whenever the bank reconciliation needs to be done, one must ascertain the possible reasons for such differences. These differences could be on the account of following two reasons. First one is timing difference. Second one is differences due to error in recording the entries. Now, what are the reasons for timing difference? These are checks issued but not presented for payment, checks paid into bank but not cleared, interest allowed by the bank, interest and expenses charged by the bank, interest and dividends collected by the bank, direct payments by the bank, direct payments into the bank by the customer. And the last one is dishonor of a bill discounted with the bank. Now, we'll discuss some reasons due to which there are errors in recording the entries. First one is errors committed in recording transaction by the firm. Next one is omission or wrong recording of transactions relating to checks issued, checks deposited, and wrong totaling, etc. Errors committed in recording transactions by the bank. Next one, omission or wrong recording of transactions relating to checks deposited or wrong totaling, etc. Now, we will discuss some important points which are to be noted while making BRS. Favorable balance means that the bank owes to the firm. It is also known as bank balance. The following balances are favorable balances. First one, debit balance as per cash book and credit balance as per passbook. Now, unfavorable balance means that the firm owes to the bank. It is also known as bank overdraft. The following balances are unfavorable balances. First one, credit balance as per cash book and debit balance as per passbook. In case it is not specified, then it is assumed that the balance is favorable balance. Only those transactions are recorded in BRS which are recorded in either of two books or both books but wrongly in either of two books. When we start with the cash book balance or overdraft, then we end up with passbook balance or overdraft. On the contrary, when we start with passbook balance or overdraft, then we end up with the cash book balance or overdraft. It is not necessary that if we start with the favorable balance, we will end up with the favorable balance. And if we start with unfavorable balance, then we will end up with unfavorable balance. Now we will move on to the steps for preparing BRS. The date of preparing BRS is selected, which is generally the last day of a month. Cash book and passbook are compared to identify the differences. Common items are marked and unmarked items become the basis for preparation of BRS. The unmarked items are to be classified into common groups on the basis of characteristics. The balance or overdraft as per cash book or passbook should be taken as starting point. Favorable balance is taken on the plus side and vice versa. Adjustments are made for unmarked items. At the end, if plus side is greater, we get favorable balance, and if minus side is greater, we get unfavorable balance. Now, let's have a look at the illustration. In the given illustration, the statement is, from the following particulars of Anil and Company, prepare a bank reconciliation statement as on August 31st, 2014. Balance as per cash book, $54,000. $100 bank incidental charges debited to Anil and Company account which is not recorded in cash book. Third point, checks for $5,400 is deposited in the bank but not yet collected by the bank. A check for $20,000 is issued by Anil and Company, not presented for payment. Now we will move to the solution of the same illustration. That is, we'll start from the first point. Balance as per cash book, $54,000. As we have already discussed, balance as per cash book is a favorable balance, so we will write it on the plus side. Next, $100 bank incidental charges debited to Anil account which is not recorded in cash book. According to this statement, $100 were deducted by the bank from his account, but the cash book remained the same. That means $100 have not been deducted from the cash book. So in this point, we will subtract $100 from the cash book balance. Next, checks for $5,400 is deposited in the bank but not yet collected by the bank. Due to this, the balance of cash book increased by $5,400, but in the bank account there was no such entry. So we will have to reduce the cash book balance by $5,400. And the last one, a check for $20,000 is issued by Anil and Company, not presented for payment. In this entry, the moment the check was issued, Anil and Company have reduced the cash book balance by $20,000, but the bank balance was not reduced because it was not yet presented for payment. So the balance of cash book has been reduced. In order to cancel its effect, we will have to increase the balance of cash book by $20,000. So at the end, we will calculate the balance, that is $54,000 plus $20,000 minus $5,400 minus $100, which is equal to $68,500. Now, as we know, the balance is on minus side. That means the minus side is short. So we will write balance as per passbook, 68,500 on the negative side. Now, let's move on to another illustration in which the balance as per passbook is given. The bank passbook of Messrs. Brother and Company showed a balance of $45,000 on 31st May 2014. First, Checks issued before 31st May 2014 amounting to $25,940 had not been presented for encashment. Two checks of $3,900 and $2,350 were deposited into the bank on 31st May, but the bank gave credit for the same in June 2014. Last point is, there was also a debit in the passbook of $2,500 in respect of a check dishonored on 31st May 2014. Now, we are supposed to prepare a bank reconciliation statement as on 31st May 2014. So, we'll start the solution with the balance as per passbook, that is $45,000. So, we will write it on the plus side because it is not an overdraft. Now, we'll look for the entry that is checks issued before 31st May 2014 amounting to $25,940 had not been presented for encashment. So, the moment the company issued checks of $25,940, the balance of cash book was reduced. But as it was not presented for the payment, the bank balance remained increased. So, in order to cancel its effect, we will decrease the balance of passbook by $25,940. Moving on to the next entry, that is two checks of $3,900 and $2,350 were deposited into bank on 31st May, but the bank gave credit for the same in June 2014. Now, as we are preparing the BRS for till 31st of May 2014, the transaction which took place in June 2014 will not be considered. So, the total of this becomes 6250. Two checks were deposited into bank, so the cash book balance was increased and the passbook balance remained low. So, in order to cancel its effect, we will increase the passbook balance by 6250, that is on the plus side. Last entry, there was also a debit in the passbook of $2,500 in respect of a check dishonored on 31st May 2014. Now, in this case, the moment the check was dishonored, the balance of passbook went low. The balance of passbook decreased. So, in this case, in order to nullify the effect, we will have to increase it by $2,500. So, at the end, we will calculate it by adding up all the values in plus side and subtracting all the values which are on negative side. So the total becomes 27810, that is balance as per cash book. Now moving on to the next illustration, which discusses about overdraft as per cash book. On 31st March 2014, the bank column of the cash book of Agrawal Traders showed a credit balance of $118,100, that is overdraft. On examining of the cash book and the bank statement, it was found that checks received and recorded in the cash book but not sent to the bank for collection, that is $12,400. Payment received from a customer directly by the bank, that is $27,300, but no entry was made in the cash book. Checks issued for $175,200 not presented for payment. And the last one is interest of $8,800 charged by the bank was not entered in cash book. Now we are supposed to prepare bank reconciliation statement. In this question, overdraft as per cash book is given as $118,100, so we will mention it on the negative side. And we'll move on to the first adjustment, that is checks received and recorded in the cash book but not sent to the bank for collection, that is $12,400. So in this case, the moment the checks were received, we have increased the cash book balance, but it was not sent to the bank. So the cash book balance has been increased, but in order to cancel its effect, we will have to reduce the balance of cash book by $12,400. Next, payment received from a customer directly by the bank, that is $27,300, it increased our passbook balance. So, in order to cancel its effect, we will have to increase our cash book balance by $27,300. Next one is Checks issued for $1,75,200 but not presented for payment. The moment we issued these checks, we decreased our balance of cash book by $1,75,200. But these were not presented for the payment. It means the bank balance was increased. The bank balance remained increased. So, in order to cancel its effect, we will have to increase our cash book balance by $1,75,200. And the last entry, interest of $8,800 charged by a bank was not entered in cash book. It means bank have reduced our balance by $8,800. That means our cash book balance had remained more by $8,800. In order to cancel its effect, we will have to decrease it by $8,800. So, at the end, we will find that the negative side costs short by $63,200, that is, balance as per passbook, and if it is shown on the negative side, it means it is favorable balance. Now, moving on to the last example, that is, overdraft as per passbook. From the following particulars of Asha and Company, prepare a BRS on December 31st, 2014. Overdraft as per passbook, $20,000. Interest on overdraft, $2,000. Insurance premium paid by the bank, $200. Checks issued but not presented for payment, $6,500. Check deposited but not yet cleared, $6,000. Wrongly debited by the bank, $500. Now, let's move on to its solution. The first entry will be overdraft as per passbook. Now, we will write it on the negative side as it is an overdraft. So, on the negative side, we will write $20,000. And first is interest on overdraft. Now, interest on overdraft is charged by the bank. It means our bank balance will be reduced by $2,000. So, as we know, we are solving this question on the base of passbook. We will have to increase the balance of passbook by $2,000. Next is insurance premium paid by the bank, that is $200. In this case, the bank balance has been reduced by $200. In order to cancel its effect, we will have to add these $200 on the plus side. Next one, check issued but not presented for payment. The moment the checks were issued, the balance of cash book was reduced by $6,500. It means the balance of passbook remained more. In order to cancel its effect, we will have to reduce the balance of passbook by $6,500. Next is check deposited but not cleared. The moment we deposited the check into bank, we increased our cash book balance by $6,000. But we get to know that the check has not been cleared. It means the bank balance remains low by $6,000. In order to cancel its effect, we will have to increase the balance of passbook by $6,000. And the last entry is wrongly debited by the bank, $500. It means the bank has wrongly or by mistake debited $500 from your bank. It means the balance of passbook has been decreased by $500. In order to cancel its effect, we will have to increase the balance of passbook by $500. So at the end, we will find the total of plus and negative side, and we will find that the plus side is falling short by $17,800. Now this is balance as per cash book, and if it is on the plus side, it will be overdraft. So finally, we find the answer, that is balance as per cash book, overdraft $17,800. This is all for today. Thank you.